Alright, what is up? Welcome back to another video. And in this video, I'm actually be going to show you the trade that made me a lot of money. This was my biggest winning trade of the month. Well, it's only the 5th of December. But yeah, this is the biggest winning trade of the month, and I'm going to talk you through why I took this trade exactly. And the trade that I caught was this trade right here. I took a short position right here. My stop loss was only 7.5 pips, and then my take profit was 75 points. So yeah, this was the trade that I took today. It was the inversion model that I trade and that I will explain to you in this video. This inversion model is better than any other trading strategy that I have used, better than silver bullet, just better than using regular fair value gaps. It has over an 80% win rate. Honestly, it is more than that, and the risk to reward is absolutely incredible. So if you do lose one of the trades, it won't be a big loss at all, and the take profits are normally pretty large. So yeah, let's jump straight into it. So if you don't know the strategy that I trade, it's called the inversion model. I trade it live every single day in my Discord for free. So if you do want to join my Discord, link is in the description. I trade live every single day, completely for free right now. So make sure you join that Discord. I just hit 150 members, which is very nice. But all the inversion model is you have a regular fair value gap. So let's say this blue box is a fair value gap, and normally you'd want to see a fair value gap used as support or resistance. So you'd like to see the price come into the fair value gap and then bounce off in one direction, or if you wanted to see a bearish fair value gap used, you'd want to see the price come into the bearish fair value gap, respect it, and then go in its direction. But actually, with the inversion model, what you want to see is the price to disrespect the fair value gap. So what I want to do is I want the price to come up, close above the fair value gap, and as soon as the price closes above the fair value gap, it will turn into an inversion fair value gap. So as you can see right here, we have a bullish fair value gap right there. And so if we mark out this bullish fair value gap like that, as soon as the price closes below it, so right here, this is where the fair value gap has been violated, and it is now turned into an inversion fair value gap. And I know you guys are probably all saying, "Oh, this is hindsight. This is hindsight." I took this trade on 3 different accounts, on two funded accounts and my personal account. I called it in the Discord as well. I said that I wanted a nice. I was looking for shorts. And yeah, so as soon as we get this candle close below this bullish fair value gap, that is where I enter into the trade. Now, a lot of you are sometimes confused by this, and you tell me, "Oh, why don't I wait for a retest of this inversion fair value gap?" And this is a prime example of why I don't wait for a retest. It is because you don't always get the retest, and if you want to wait for the retest, you can wait for the retest. But just what I've found is I don't always get the retest of the inversion fair value gap. And honestly, for the sake of how many points? For the sake of 3.5 points, I will risk a 3.5 point entry to then not getting tagged in at all and missing a 70-point move. So yeah, that is the reason why I enter on the candle close below the fair value gap, and why I don't wait just for a retest of the fair value gap. Now, if it is a big fair value gap, so let's say if I was going to enter an inversion fair value gap and the candle was this big, what I might want to do is wait for a confirmation entry inside of the inversion fair value gap but for this specific case, I just entered on the candle close below. And where would my stop loss be? A lot of you are probably wondering. My stop loss is as soon as the price action closes above, in this instance, this inverse fair value gap. So if I'm using a bullish fair value gap as my entry, the bullish inversion, then my stop loss would be if this candle came back and closed above this fair value gap. So if the price closed around here, this is where I would then exit the trade. So yeah, that is why I entered into this trade. And you might be wondering, where is my take profit? And I did not actually target all the way down here. I actually took most of my profits here. And the reason being is just because it is already a 53-point move. So I've already caught an extreme amount of points here. I didn't want to get greedy, and if price was going to reverse, price would reverse from this point here, because it's a final bullish fair value gap. But if this wasn't such a big move already, I would have definitely held full sell side liquidity. But I just took most of my profits there, just because of that reason I have said below. So I normally always target the sell side liquidity, and we also had equal lows right here. So this was initially my main target anyway, just because equal lows and equal highs are an extremely nice draw to have on as a target, because they are an extremely strong magnet. Now, another question is why did I take this inverse here and not take this inverse here to the left? And the reason for this is because on one account I actually did take this inversion model and it was a small loss, but I only took that on 1 out of 3 of my accounts. But the reason why I took this inversion here on all 3 of my accounts was because of time. Now I hope you've made it to this point of the video, because this is kind of like a gem. This is really important, and not enough traders take this into consideration. But as you can see right here, this fair value gap was created at 10:45. And you might be wondering, alright, what is the point of that? What's the significance of that? Now, this fair value gap created at 10:45. Yes, in the next couple of minutes, we could have had a big move down. But what normally happens at 11 a.m., if you look on most days around 11 a.m., we normally get very choppy price action. Let me actually go to yesterday as well to show you what I mean. So normally around 11 a.m. we get very choppy price action. I don't actually know if yesterday it was choppy price action around 11 a.m., but I just assume it was. Okay, yeah. So here we have 11 a.m. as well. So look, around 11 a.m. we normally get choppy price action. So that is one of the reasons why for this trade I wanted to wait for this 11 a.m. window to be up before catching the big move. So I waited for this 11 a.m. window where we just have some choppy price action, and obviously I marked out this only bullish fair value gap that we had here, because this fair value gap right here is invalid, because it has already been inversed, and I don't usually use the same inverse twice. So this was the only fair value gap left. I waited for this to be inversed. As you can see, we've got a bit of displacement, and then after this consolidation, we get this big move. We get this big move to the downside. So yeah, that is why I took this specific trade today. It was a very big win. I also took a trade in the PM session, but that was just another inversion model. So yeah, if you want to watch me trade live, I trade live in Discord every single day completely for free. So just join the top link in the description. Yeah, thank you guys for watching.